This is Bloomberg Markets. Rising interest rates are taking a toll on Canadian housing markets. Home sales in Calgary, for example, sank 21% sequentially in July as the rising cost of borrowing kept buyers on the sidelines. There was a significant decline in sales activity in the detached and semi-detached segment over the course of the month, partially offset by apartment sales. Meanwhile, we've got some evidence of a slowdown underway in Vancouver, where home sales plunged nearly 23% month over month in July, again coming back to that rising rate story and the impact on home buyer sentiment. In fact, that's a drop of 43% for the Metro Vancouver area when you compare it to the same month last year. For more on the housing story, let's bring in Vancouver realtor Steve Saretsky. Steve, thanks very much for joining us.
Yeah, no worries. Thanks for having me on.
How would you characterize or describe what you're seeing on the ground right now?
I think it's an illiquid housing market. You could look at home sales, Greater Vancouver, to actually the fewest home sales for this July in 22 years. The last time sales were this low was July of 2000. So, that's not adjusting for the increase in population, of course, the increase in housing stock, over those past 2 decades. So I think when you really put that into context, I mean, again, that dwarfs, the financial crisis in 2008, 2009. So really just buyers are really tepid. Everybody wants to wait a little bit longer, one more month, hoping to get a better price, and that really is the overall sentiment right now.
I think illiquid's an interesting way to put it. In the stock market, with these worries over higher interest rates this year, we saw a lot of buyers on hold, but we saw a flood of sellers. But in the housing market, with those buyers a little cautious, what would you say about the sentiment of sellers or people who were thinking about selling? Are they putting those homes on the market, or actually are they doing the opposite?
Yeah, I mean, if you look at the data, we try to keep our emotions out of it. The inventory is actually lower than it was last year. So the actual total number of homes for sale is lower than it was last year. New listings were also down on a year-over-year basis. And so what we're seeing, though, is, when you kind of dig through the weeds, is the months of inventory for sale is still pushing higher because the demand is just so weak. So we're not really seeing this flood of sellers and everybody panicking, going, oh my gosh, interest rates are up. I think the one thing to put into context is, I think, 35% of Canadians who actually own a home have a mortgage. So, there's a lot of people that own their houses free and clear and are just opting to take their house off the market and not sell. So we're seeing a bit of that. So I would say that not a flood of inventory, but just really weak demand.
Well, that's an interesting anecdote. For those people who do have mortgages and are thinking about interest rates, and there's a growing conversation about whether or not the slowdown will hit faster in Canada because we have quite a bit of household debt in this country, and we are seeing some of those signs in the housing market. What are you hearing from potential clients, from colleagues in the industry about these rising interest rates, and what happens as the Bank of Canada continues to raise rates in this environment?
Yeah, I mean, I said it before. We started getting our first rate hike. I mean, we saw this in 2018 when mortgage rates start to move north of 3.5%. Housing slows down precipitously, and we saw this in 2018. Greater Vancouver home sales finished the year with an 18-year low in sales. Everybody thought mortgage rates were going to hit 4%. We're at 5% today, and that's really why you now have a 22-year low in sales. It's just the housing market in Greater Vancouver, and for that matter, Greater Toronto, I just don't think are built to withstand interest rates at these levels. There's too much household indebtedness. There's too much leverage built up in this housing market, and so I think that's kind of one thing I'm keeping an eye on. I know policymakers are obviously talking about housing is going to have this sort of rebalancing and soft landing. And I think just when you see 22-year lows in sales, for consecutive months in some of these major markets, to me, it doesn't look like a rebalancing.